Bitcoin, the destruction of money, and the reality of inflation. One of the things that we hear all the time is that Bitcoin is a very, very volatile asset and that it does not generate sufficient level of confidence to be an alternative to fiat currencies. However, what we do know is that fiat currencies are losing in purchasing power because governments continue to destroy it through the monetization of deficits. How do governments destroy the currency? Very easy. They issue more currency than what is demanded, the value, the purchasing power of that currency is diminished, and citizens pay for the inflation tax in higher inflation and obviously losing in real wages and in deposit savings. All of that is literally liquidating, deflating, destroying the value of the currency. And what we see in this graph, courtesy of Bloomberg, is precisely that. What we see is that all of the major currencies in the system have been diminishing in value relative to the US dollar. More importantly, the US dollar has also lost purchasing power. So what we can see is how this process of monetary destruction is generalized. So these currencies are losing value, but they're losing value relative to a currency, the US dollar, that is also losing purchasing power, i.e. persistent inflation. Why is there persistent inflation? Let's go to the next graph, which will tell us why. Money supply, my friends. Money supply is not coming down. The idea that central banks and governments are being prudent about inflation is false. By the way, no central bank prints money that the government doesn't spend prior. And this is very important to understand because governments are actually fueling the inflation process. Why? Why do governments destroy the purchasing power of the currency that they issue, and why do they perpetuate inflation? Because it's the best way for the government to create a tax that nobody perceives, which is the inflation tax. The destruction of the purchasing power of the currency is passing to citizens the imbalances of the fiscal policy by, one, increase in taxes, obviously, two, they're reducing the purchasing power of the currency, in reality making you poorer and diluting the wealth of the economy via inflation. Money supply is not coming down. What can we see in the next graph? If we look at the next graph, is that Bitcoin has been slowly but surely becoming an asset of its own relative to both cryptocurrencies and relative to fiat currencies. The increase since the creation of Bitcoin, of money supply only in the United States, is more than 170%. However, in this graph, courtesy of Bloomberg, what we see is the monster revaluation of Bitcoin in that process. We're talking about thousands percent. And this is showing what? The importance of having an independent asset in which the government doesn't have the incentive to destroy the purchasing power and to pass the imbalances to the private sector. Ultimately, printing money is a transfer of wealth from the productive private sector, from families and from small businesses to the unproductive and indebted governments. And all of that is completely different in Bitcoin. Number one, the supply of money does not grow. Number two, the purchasing power of that currency is increasing as it becomes more of a reserve of value, a unit of measure, and a generalized mean of payment. Is it already real money? Not yet, but certainly it is proving to be, with tremendous volatility. Look at the volatility. But with all of that volatility, it is proving to be at least a defense for investors against the destruction of purchasing power of currencies via money supply growth. And if we go to the next graph, I think there's a lot that we can say about why governments do this. In this 2 tables, courtesy of my good friend Steve Hanker, what we can see is that the correlation between money growth and inflation is phenomenal, and that everyone that is sort of saying that money growth and inflation have nothing to do with each other are literally lying, or they live from the destruction of the purchasing power of the currency. The correlation both in the period 1990 to 2021 and in the period 1960 to 1990 is absolutely undeniable. And why do governments destroy the purchasing power of the currency via excessive money growth? Very simple, because that is the best way to pass the imbalances of government spending and to tell you that the problem is supermarkets, energy policy, or evil corporations. They basically are generating a tax that they blame on everybody else. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.